Welcome to Talk Tickers. Today, we're diving straight into the highlights from Global Payments' first quarter earnings call for 2025.
Yeah, and this one wasn't just about the numbers, was it?
Not at all. I mean, it really unveiled a major strategic overhaul, some pretty big implications for the company's future, I think.
Absolutely. So maybe let's start with the headline figures.
Good idea.
Well, Global Payments showed pretty solid resilience. They managed over 5% growth in adjusted net revenue, constant currency. And that's actually excluding the businesses they've sold off.
Right, the dispositions. And efficiency looked better, too.
Yeah, a good sign there. A 70 basis point increase in their adjusted operating margin.
Okay. And profitability for investors watching the bottom line.
Adjusted earnings per share grew by 11%. Again, constant currency compared to the same time last year.
And importantly, both sides of the house, merchant, and issuer, they kept up the pace from the end of 2024.
Exactly. They said overall performance was pretty much in line with what they expected. No big surprises on the core numbers.
Okay, so solid quarter performance-wise. But beyond those figures, the real story seemed to be this ongoing strategic transformation.
That's where it gets interesting. They are, aggressively pursuing this transformation agenda they kicked off last year.
You can tell they're serious about it.
Definitely. They've already made, significant strides simplifying their structure, how they operate.
Like unifying the merchant business globally, that sounds like a massive project.
It is. And they're pushing ahead with harmonizing their tech platforms too, getting everything talking the same language, basically.
And it sounds like their confidence in this whole plan is actually growing.
It does. They've upped their expected benefits target by 20%, now aiming for $600 million in total benefits from this transformation push.
Wow, okay. But the real bombshells on the call, the things everyone was focused on, were the two big transactions.
Oh, yeah. Selling off the issuer solutions business.
And at the same time, acquiring Worldpay.
Exactly. You put those two together, and it signals a very, very deliberate strategic shift. Management seems convinced this accelerates everything.
Shed the issuer business, bring in Worldpay, faster transformation, stronger company. That's the pitch.
And they sounded very confident, high conviction that this builds a more durable platform for the long haul.
What's the core logic? Is it just about focus?
Well, focus is a big part, but also complementarity. They see Global Payments and Worldpay's merchant businesses fitting really well together.
And they made the point that selling issuer processing solutions to banks, well, that's a different game than selling to merchants directly, right?
Completely different market motion, yeah. And apparently the opportunity just popped up to do both deals of the sale and the acquisition simultaneously, so they took it.
Speaks volumes about their conviction, like you said. This whole transformation thing, the goal is simplification, streamlining.
Yeah, setting themselves up for the next decade of growth. They want to be more focused, unlock more value. That seems to be the mantra.
And these deals certainly do that. Sharpens the focus squarely on merchant solutions, makes them a much bigger player globally in that space.
It cements their position, as they put it, as a leading pure-play commerce solutions provider for all sizes of merchants.
Which means, crucially, they can now pour all their investment into those merchant solutions, no longer splitting focus.
And that's where the capabilities piece comes in. How well do these two actually fit? Global Payments has its strengths.
Right. SMBs, their Genius point-of-sale tech, vertical-specific software.
And Worldpay brings, best-in-class e-commerce and enterprise muscle, managed pay solutions, plus, and this is interesting, presence in new geographies.
Japan, France, the Nordics. Places Global Payments doesn't have a huge footprint currently.
Exactly. So you combine it all, and the idea is you get this really complete commerce platform, extensive distribution, wide reach.
The hope being faster growth, more innovation, better client experiences.
And fueled by that dramatically boosted innovation pipeline. Over $1 billion a year just focused on merchant solutions. That's a big number.
Okay, let's talk financials. The pro forma combined entity. What does that look like?
Big picture. Around $12.5 billion in adjusted net revenue and roughly $6.5 billion in adjusted EBITDA once the deal closes.
But beyond the top line, the synergies are key here. They seem pretty bullish on cost savings.
Very. They see a clear path to at least $600 million in cost synergies. That's from aligning merchant operations, streamlining tech, cutting out duplicate support structures. the usual M&A playbook.
And crucially, that $600 million is on top of the $600 million they were already targeting from the original transformation plan, right?
That's right. It's incremental. So potentially $1.2 billion in total efficiency gains floating around.
Wow. And what about revenue synergies? Making 1 + 1 equal more than 2?
They're confident there too, targeting at least $200 million more in revenue. Think cross-selling, boosting omni-channel capabilities, getting deeper into high-growth verticals.
Leveraging that huge combined base of 6.5 million merchants.
Exactly. So the path they're painting is faster revenue growth, faster earnings growth, and ultimately the ability to return more capital to shareholders long-term.
How does this all square with the strategy they laid out back in September? Does it fit?
They argue it accelerates it. That original strategy had 3 main pillars for merchants: point of sale and software,
Integrated and embedded payments.
and core payments processing, and they see Worldpay strengthening each one directly.
Okay, how so?
Well, they can sell Genius POS into Worldpay's SMB base, for one.
Makes sense.
Worldpay's Parox platform boosts their integrated and embedded game.
Right, payments inside software.
And Worldpay obviously brings world-class e-commerce to the core payments pillar. Plus, like we said, it beefs up their international presence significantly.
Okay, so strategically it lines up, but integrating something size of Worldpay, that's always the challenge, isn't it?
It's a huge challenge. But they emphasize the groundwork they've already laid with their own transformation, consolidating merchant tech and ops teams before this deal.
So they feel they have a running start.
That's the message. Clear operating model, scalable processes, a firm integration strategy. They expect to have Genius retail and restaurant POS launched globally before the deal closes.
And the sales organization revamped done too.
That's the plan. Aligning under a common brand and commercial approach from day one post-close.
And on the tech side, Global Payments has unified its teams using common platforms, that orchestration layer they acquired.
Right. And Worldpay apparently has a pretty streamlined architecture itself with a single access API. So they believe they have a clear view on execution, leadership identified, work streams ready.
Okay, ambitious. Let's look medium term then. What's the outlook?
Well, first, they reaffirmed the 2025 outlook for standalone global payments, mid-single-digit adjusted net revenue growth, excluding dispositions.
And about 50 basis points of adjusted operating margin expansion. That's unchanged.
Right. And they expect Worldpay, on its own, to deliver similar growth and margin expansion from 25 through 27.
But for the combined company,
That's where they expect acceleration. Faster revenue growth kicking in for 2026, hitting high single digits by 2027.
and margin expansion too.
Yeah, a significant jump expected there. 100 to 200 basis points of margin expansion in both 2026 and 2027.
Which translates to
Uplifted adjusted EPS growth targets. They're now guiding to the mid-teens over the medium term for the combined entity.
Okay. And capital allocation. How does this change how they use their cash?
Well, like we touched on, significantly more firepower for innovation. That 7-8% of adjusted net revenue target means over $1 billion a year just for merchant solutions.
And shareholder returns.
Still expect to return roughly $7 billion to shareholders between 2025 and 2027. That number holds.
But longer term,
By 2028, they're projecting their annual free cash flow and capital return capacity will be nearly 50% higher because of these deals.
50% higher, wow. And debt. They have to pay for Worldpay somehow.
Right. They're committed to getting net leverage back down to 3 times earnings within 18 to 24 months after closing. Standard deleveraging plan post-acquisition.
Okay, let's circle back to the actual Q1 2025 results in a bit more detail. Top line was $2.2 billion adjusted net revenue.
Correct. But remember, the underlying growth, constant currency and ex-dispositions, was over 5%. Those sole businesses and FX headwinds took a chunk out of the reported number.
Got it. And drilling into merchant solutions,
$1.69 billion adjusted net revenue there. Underlying growth was 6%. Again, dispositions and FX were headwinds on the reported figure.
what drove that 6% growth?
Strong performance in POS's point of sale and software, and the integrated embedded businesses. Both saw high single-digit growth.
And core payments.
Still solid, mid-single-digit growth there. And the merchant margin was strong, 47.8%, up 80 basis points.
Okay. And issuer solutions, the business they're selling.
$529 million adjusted revenue. Underlying growth was 3%, mostly from consumer card volumes.
Margin dipped slightly there.
Yeah, down 50 basis points to 46.3%. They cited softer commercial volumes and ongoing tech modernization investments. They also added 15 million traditional accounts, which is quite a few.
And cash flow.
Adjusted free cash flow was about $512 million, a decent 77% conversion rate for the quarter. CapEx was $128 million, on track for their $780 million target for the year.
Leverage under 3.2 times, share buybacks of $450 million. Sounds like they ended the quarter in a solid position.
Yeah, $3.8 billion in available liquidity, too. Plenty of flexibility.
So looking ahead to the rest of 2025, they basically just reaffirmed the existing guidance, right?
Pretty much. That 5-6% constant currency adjusted net revenue growth, excluding dispositions. Still expecting dispositions to knock over 3 points off reported growth.
But the FX headwind looks a bit less severe now.
Yeah, now expected to be just over 100 basis points, which is slightly better than before. Adjusted operating margin still expected to expand about 50 basis points ex dispositions.
And the segment outlooks for 25 remain the same. Roughly 6% growth for merchants, 4% for issuer, both with 50 basis points margin expansion.
Correct. They do expect growth to tick up modestly in the second half. Full year free cash flow conversion target is still over 90%.
And the leverage targets, 3.5 times at close, around 3 times by year-end 2025. And that 10-11% adjusted EPS growth for the full year, constant currency.
Yep, all reaffirmed. Steady as she goes for the standalone 2025 plan.
Okay, let's talk about that Genius platform rollout. It's happening soon.
Very soon. Sounds like just a couple of weeks. Initially, the focus is mainly on the front book, new clients.
What about existing clients? Are they forcing a migration?
No, they were clear on that. No nuclear conversion, as they put it. They're developing pathways for the backbook to migrate, but at their own pace.
Do they expect much attrition, people leaving rather than switching?
They seem to think very little. The argument is Genius offers more capabilities. It's modern new hardware. It should be attractive.
And the opportunity gets bigger post-Worldpay.
Significantly.
Wow.
Huge front book opportunity using Worldpay's distribution. Plus that backbook opportunity with Worldpay's million SMB merchants. That's massive.
Interesting point about Worldpay's recent growth being purely organic.
Yeah, driven by investments they made themselves, particularly in e-commerce and enterprise. That's half their business now, growing high single digits.
And the Parox platform, too.
Big driver. Over $300 million in revenue, growing over 20%. And even their SMB portfolio has improved because they rebuilt sales capacity. So Worldpay comes in with some momentum.
Let's quickly touch on buybacks again. Still targeting over $7 billion back to shareholders through 2027.
Yes. And they gave some specifics. Expect well over $2 billion in buybacks in 2026, over $3 billion in 2027.
Which feeds into that mid-single-digit EPS growth post-closing.
Right. Capital returns in 26 and 27 should be about 10% higher than the standalone plan, and then that nearly 50% higher capacity by 2028.
This orchestration layer you mentioned, why is that so critical?
It's really about minimizing client disruption during all this integration. It gives clients a single way to access products, get consolidated reporting.
Hides the complexity underneath.
Essentially, yeah. Makes the underlying tech less relevant to the client. Internally, it amplifies the impact of their tech and product development.
How so?
It sort of flattens the internal architecture virtually. Makes it easier to leverage AI, data, and deliver products faster across all platforms and regions.
And the fact Worldpay is on a similar modernization path helps.
Definitely simplifies the overall tech integration roadmap. Absolutely.
Any more businesses potentially up for sale? They mentioned further dispositions?
Yeah, they're still targeting another $500-600 million in revenue to divest over the next couple of years. About $300 million is done already. Expect a little more trimming to streamline the portfolio.
And the Salesforce reorganization? Sounds like that's well underway.
It is. Teams aligned regionally, segmented by enterprise and SMB, common comp plans. They're seeing positive early results, strong pipeline.
And Worldpay's sales team is also improving.
Yeah, seeing better growth across all segments there too. And importantly, the distribution channels between the two companies are seen as complementary, not overlapping much.
Where is the revenue growth actually coming from? Is it just price increases?
Primarily organic, they stressed. Strong new sales production in both businesses. Underlying same-store sales trends are stable. Pricing optimization is happening, but it's relatively modest, in line with past practices.
What about recessionary pressures? How prepared are they?
Well, currently, they feel well situated. Diversified geographically and by industry in the merchant business. The issuer business adds some insulation short term.
And post-Worldpay.
They expect to be equally well prepared, maybe even better. Worldpay brings exposure to more defensive sectors like big box retail and grocery. The sheer size, scale, and diversification of the combined entity should enhance resilience.
They've invested a lot in POS over the years. Is Genius really competitive now?
They believe so. The focus now is harmonizing investment into single retail and restaurant platforms globally via Genius. Combining that with Worldpay's billion-dollar-plus annual investment should really accelerate innovation there and in other growth areas.
How do they manage product development across both SMB and enterprise? Those can be very different needs.
They expect convergence over time. Blending capabilities across segments is critical. Digital commerce keeps growing, so Worldpay's e-com strength is key. Embedded models evolve. Having broader tools is vital.
So centralize where it makes sense, decentralize where needed.
Pretty much. Central product management for common tech stacks, but capabilities kept close to specific verticals and geographies for faster reaction. They have a history of bringing enterprise features down to SMBs too.
And finally, the macro outlook. What's baked in?
Consumer spending trends still look resilient. Their current outlook assumes a stable macro environment for the rest of the year. No major downturn factored in right now.
Okay, fascinating stuff. Let's shift gears slightly. Time for our This Is Not Financial Advice segment. What outrageous but plausible trade idea have you got for us today?
All right. So, given this massive focus on integrating Worldpay, the scale of it, the synergies they're chasing, here's one. Maybe look at companies specializing in post-merger integration software and consulting services.
Ah, the picks and shovels play on big M&A.
Exactly. Deals like this require heavy lifting to combine systems, processes, data. If more large-scale deals happen, or if this integration proves complex, demand for those specialized services could really spike.
Interesting angle. Okay, I've got one too. They talked a lot about expanding into new geographies. Japan, France, the Nordics via Worldpay.
Right, boosting that international presence.
So maybe explore potential long positions in ETFs that are focused specifically on the payment processing sectors within those regions. You'd be betting on growth potential spurred by global payments' enhanced presence and Worldpay's existing foothold.
A geographic play on the combined entities expansion. I like it. Outrageous, but plausible.
Absolutely. Okay, that was a really detailed look into the global payments earnings call.
A lot to unpack there. Key takeaways for me are definitely the huge strategic pivot with Worldpay, the potential financial upside they're outlining.
And the sheer amount of work involved in the ongoing transformation and upcoming integration. Plus that focus on innovation, especially Genius, and the global expansion. Lots of moving parts.
For sure. But remember, folks, this is just our take on the call. Our interpretation of what was said.
Absolutely critical. Always do your own thorough research before making any investment decisions based on what you hear.
So what stood out most to you listening in? Any burning questions still lingering? We'd love to hear your thoughts.
Definitely let us know. And join us next time on Talk Tickers for another deep dive.